What is up, guys? I'm back yet again with another one. Today, I'll be talking about how understanding human psychology can help improve your trade executions. All right. So before I go any further, it's important to understand what we mean or what we refer to when we're talking of human psychology, especially in the marketplace. So basically, human psychology in the marketplace is such that we always want to buy at low prices. And similarly, if we have a product or service that we want to sell at a premium or at a high price. So with that, we can go into this chart and dissect how understanding just this very easy or very natural concept can help you when it comes to placing your trades. So in front of me here, we have the volatility 25-1S on the weekly time frame. And what we have is an uptrend in this region. And I'll explain to you why quickly. Why is this an uptrend? One may be asking. Well, it's very simple. We have a high over here, all right? We have a higher high over here, and we also have a higher high here. I know someone is wondering, how do you know that this is a higher high? A quick glance at the line graph will show you that this high here was actually taken out by this move and we formed a higher high. See, guys, this is why it's important for you to use all the tools that you have available so that you can at least understand the market structure, okay? So now that we understand that we're in an uptrend, we need to see what's happening. We need to see and understand that the next key point of interest for a buyer would be in this region, because we're expecting price to come and form a higher low here. And then if market structure is to be respected, we keep going up, breaking the highs, because that's what happens in an uptrend. We form higher highs and higher lows. But all of that is very futuristic. Let's deal with what's in front of us. So knowing that we formed a higher high here and price started distributing here, this would allow for us to get a sell bias in this region to sell the market at least until our target, as mentioned, which is somewhere around here. So we should be in sell positions right now. So now this begs the question, how would we have entered the sell position in this key point of interest at this high to sell the market? Okay, so now this is where you scale down. So remember, our bias is already that of a sell. We are sell biased. So before we scale down to the lower time frames, we should always have a bias to say, look, we are in a higher time frame. We're at a weekly high. You see, these are weekly highs, okay? We're at a weekly high, and therefore we should not be looking for buys. Obviously, we should be looking for sells, which makes this sell bias justifiable, okay? So now, before we go any further, I need you to understand any form of a consolidation in the market, right? For instance, this is a consolidation here that results in price breaking that consolidation and moving down is what we call a distribution phase, okay? And then similarly, any consolidation that forms and then results in price moving up when price breaks that consolidation is what we call an accumulation phase, all right? So currently in front of us, we have this distribution phase. It's important for us to assess and analyze what actually happens in distributions before price it goes in our direction. So remember, once price has entered here, these highs, we're already biased. We know that we want to sell, but placing the sell trade is also of importance, the execution. So this is where human behavior can help you to assess or to get a really nice trade entry. Okay, so now we're on the H4 time frame. Let's zoom out to see how that human psychology I've been talking about can help you to place your trades. So now that you understand that you're sell biased, you need to submerge yourself into how a seller perceives transactions or how a seller behaves in a marketplace. And as I mentioned, every and any seller always wants to sell at a premium price, at a high price. That's the reason why we have marketing. That's the reason why for products we have nice packaging. It's all reasons for one to be able to justify a high price, because that's what human beings do. If they're in business and if they're selling a product or service, they're always trying to find a way to make the customer pay more. This is very natural. It's just what human beings do. So now your job is to look at your key point of interest and to assess, since I'm a seller, where are the high selling price premium points in this key point of interest? So obviously we always take our entries from order blocks, all right? So now your job, once prices touch this high, is to find the premium order blocks, right? To find the prices at which you are willing to take a sell trade. Remember, you're sell biased. So for instance, price stormed through and hit this high, all right? These are the weekly highs. And guess what? Price starts moving down. And you know what you do? You do not place your sell trades here, okay? I know some people would have probably sold the market here. This is very dangerous because once again, you're going against your natural self or natural human behavior. You're selling at a low price. Understand one thing. If you can realize, or if you can just look here on this chart, this is the 4-hour chart. What this means is that a few days ago, someone managed to sell this instrument at this price here, which is around 415,355. As a normal negotiator, right? Why would you then be fine with selling that same instrument at this price? You know, this is what always drives the price back in that region, because you're going to try to find a way to justify a high price using past data, because that's what Forex, or that's what trading is all about. It's using past data to predict what could happen in the future in the marketplace. So once again, if we can know that in the past, someone managed to sell this instrument at this price, there's no reason for you to sell that same instrument at this price. You're being ripped off. All right. So this is why it's important for you to look at the premium price points within your key point of interest. And I can already see one here at this order block here. This is definitely a premium price, you know? So once price moves away, you're not trying to sell at these low prices. You rather want it to retrace back into a premium price, and then you can place your sell trade. There it is justifiable. So this is an example of an entry you would have made in the distribution phase using human psychology. And then similarly, moving forward within this distribution phase, another premium price leaving an order block was made here. All right. This is the order block. Price moves away. And for me, that would be a key point of interest to actually place my entries. Why? Because I am not trying to sell the market at these low prices. Once again, just because prices come here impulsively and then they're throwing impulsive candles as if we're going, I'm not going to get trapped about that, trapped by that. I know how human beings behave. There's no ways in hell someone would be okay selling a product at this price when 4, 8, 12, 6, when about 28 hours ago, someone got away with selling it at this price. This is what always drives the price back into that premium range so that the sell trade can be taken. All right. So in this example alone, you can already see how understanding that I'm coming from the higher time frames, I have a sell bias. I'm now in the key point of interest to sell in the distribution phase. Now my job is to pinpoint the high selling premium price points because I'm a seller, and then I trade away from them. Okay, so this is a clear example, once again, of what human behavior, understanding what human psychology is like and applying it to your charts. Okay, let's go into another chart and see this concept really. Okay, so quickly on the monthly time frame, self-explanatory stuff, we can see that we're actually in a downtrend. Why? One may be asking. This is a high over here, right? And then we have a lower high over here, and probably price is on its way to form a lower high. So imagine what's happening, right? Just pure principles of the Dow theory of a downtrending market. This was a low, this was a lower low, and we have formed a lower low here. Hence this bullish engulfing candle that is engulfing this candle. We are going up. The momentum is very bullish even on the monthly. So what a normal person or a smart person would be trying to do is to catch some buy trades, at least until somewhere around here where we can expect a higher, a high. All right, sorry, a lower high. Okay, so now quickly, let's scale down to the lower time frames and assess how we would want to jump into this market. Okay, so remember, now that we are buy biased from the monthly, remember we're saying we want to look for buys, we need to submerge ourselves into the psychology of a buyer. No matter who you are, even if you have money, if you understand that you can buy a product, the same product that you're eyeing for a lower price, you're really going to go for the lower price, because that's what human beings do. It's human psychology. It's your natural self. When you're in a buyer's mindset, you always want to buy for less. This is the only reason why when it comes to trading, you have been taught always buy low and sell high. And the thing is, many people get trapped in looking at patterns and looking at candles that they forget that this chart itself showcases human behavior. And if you can take advantage of it when it matters the most in your key points of interest, your executions can be really good. Okay, so now we are saying that we want to catch a trade, a buy trade, but obviously at a discount, right? We are buyers, so we are looking for a lower price. So now it's important for us really using this price action here to be able to pinpoint where a discount level could be. So now let's use past data, okay? Let's use past data and use somewhat this whole region here, okay? So we know that we had formed that low, right, from the higher time frame. So we know that we want to buy, okay? So the mistake that many people make, right, is they look at textbook examples and they are told that when a resistance breaks, for example, for instance here, all right, when a resistance breaks, you enter the trade, but that does not work, okay? Here you need to pinpoint discount prices, discount levels for you to make trade executions that actually make sense. So in this whole region here, your job really is to look for order blocks at the lows, right? Order blocks at a discount price so that you know for a fact that you're buying low, which is what buying human psychology is all about. So with this price action all over here, your job really is to pinpoint the order blocks at the discount prices, right? So you don't want to ever buy at these high prices, right? You want to always buy when there's a reduction with regards to relative to the price action in front of you. And I can already tell when price left like this, you'd be crazy to be tricked by these bullish engulfing candles to start buying at these high prices. When you can understand that, look, if your friend managed to buy this same instrument a few days ago at this price, why would you as a normal human being go and buy that same product at this price? This is what always drives the market back to these levels, to this discount, that past data of knowing that someone else got away with buying this same instrument, this same product, this same service at this price. Therefore, there's going to be a sweet talker, someone who can negotiate at these prices to say, but look, I am willing to buy considerably a significant amount from this price. So this is what makes us interested at the discount levels, at the low levels when we're trying to buy. And in this example, you would have entered here. All right. So now with the current price action, we said that we are going up, right? We are going up. So now it's important for us to even assess what is this within this price action over here. Let's not scribble. Let me delete all of this. Within this price action right in front of us right now, what would be a discount level, right, for us to take a trade? So it's important, right? We can go to the H4 and we start looking for order blocks at discounted prices within this price action over here. Okay, so I could say that this was a high that was taken out, right? And price has formed a double top, and somewhat a retracement into this region would be justifiable for a buy, because remember that monthly candle momentum is really bullish right now. So we just need to find a discount price at which we can enter the trade. On the H4 time frame, I would not want to use this order block because the price is still somewhat high. But an order block here, all right, is a good enough discount for me, or a good enough price reduction for me to want to engage in the market. Similarly, as this order block here, it does make sense for me to put some buy positions with regards to the current price action in terms of discount and premium pricing. I want a discount because I'm a buyer here. This is the reduction in price that I'm willing to engage in the market, and we keep going up. See, the problem with textbook trading is that someone is seeing a resistance here, right? And they've been taught that when the resistance breaks, all right, what happens is it turns into support. So quickly, let me just fix this here. This is what's happening. The resistance broke, and right now they're throwing some rejections, fake rejections, so that you start pumping buy positions. What one is forgetting is that this is too much of a high price to buy with the considering the relative price action in front of you. You want a reduction in price, and then we can continue with the move. Okay, so in a nutshell, guys, you can actually incorporate human psychology, or should I say human behavior, in your trade executions. It gives you a better risk to reward in any case, and it allows you to submerge yourself in the market, because as I said, you need to understand that as much as these candles are just green and red, they actually showcase how human beings behave in a marketplace. Remember, a market, textbook definition of a market, is a place where sellers and buyers meet. And that's exactly what's happening here. Someone is placing sell right now, and another is placing buy. Now, you just need to understand that if you're a seller, you always want to sell at a high price relative to the price action in front of you. And if you're a buyer, you always want to buy at a discount relative to the price action in front of you. All right, guys, so that's enough from me. As usual, as I always mention, my mentorship goes ahead still. If you are finding it hard to trade consistently, you can always shout, you can always WhatsApp me or give me a ring. I'll always leave my contact details in the description below. And I also have my trade setup and alert platform. It's a really good platform for you to be able to understand how to trade, because all setups are actually sent in the form of videos, so you actually understand how to analyze over the long run, as you'll be seeing what we do on a daily basis. But In any case, as I always say, concentration is key, dedication is key, and these things do not need to be complex because they're not. There's nothing complicated about trading, but we as human beings, once again, we like complicating things that shouldn't be complicated. But that's enough for me, guys. Ciao. Thanks.